about the IPOs and the earnings at the moment on the Business Breakfast. As Richard mentioned, Parkin is our big story of the morning, and maybe we need to come up with a local acronym for some of our biggest caps, because there is a new acronym in town. European stocks currently being propelled to record highs by the granolas, and I want to get this right: GSK, Roche, ASML, Nestle, Novartis, Novo Nordisk, L'Oreal, LVMH, AstraZeneca, SAP and Sanofi. Are we a bit over-acronymed? We're joined now by Gary Dugan. He's the Chief Investment Officer of Dalma Capital. Gary, good morning.
Good morning.
I mean, it's clever. The granolas fit together nicely. Is it a convenient acronym, or is this group somehow indicative of what's happening in the European economy?
I think it is. I mean, if you look at, retail investors at the moment are trying to find something other than tech to invest in. And, I think we've seen this granola thing created. And it's created out of some foundation. I think, the opportunity in Europe is amongst their global leading stocks. And many of those are healthcare. Some of them are tech. And that really and food and luxury goods. And that combines a lot of these things together in that acronym. But I think it at least has some validation.
Well, it's interesting you mentioned the tech, because both the FANG stocks and the Magnificent Seven, very, very, very tech heavy. But as you mentioned here, this is more diverse. If you take out the luxury goods, it's very strong on the drug and the healthcare, though. Is that too narrow?
I don't think so. I mean, I think it's just in terms of the opportunities around the globe at the moment. You look at that healthcare sector, which was one of the huge growth sectors in the past. I mean, I covered this sector back in the 80s, where it was the only sector you wanted to buy. And we seem to have had this lull where we've not had the same big drug launches, the big noise that clearly the tech industry has been able to achieve. So I think it is a time to be looking back to what are growth stocks and have been largely ignored.
Are the growth stocks here, though, largely on the back of what we call anti-growth, the anti-obesity drugs coming out from the likes of Novo Nordisk?
Well, you need the old blockbuster in order to get excitement in the sector. But to be fair to these companies, they've remained committed to their, committed to the research in their pipeline. I think it goes beyond one stock. It may just be that we don't have so many blockbusters in the future, but we still have good growth.
Well, here's the reason that we're talking particularly about these acronyms and these groupings at the moment. I mean, this group, the granolas, is up to 50% of gains in some indices. Is there a danger when we see growth consolidated like this, when we see a narrow rally?
Absolutely, and I think there's almost a suggestion that just because something is up as powerful as this, then everything's okay. It isn't okay. I mean, one example is that the US economy is judged by economists to be only growing at 1.5% per annum into the future, and therefore the only place to go to is growth, but it can sometimes just have a very narrow focus.
But at the same time, we've got Goldman Sachs just for the second time reviewing its outlook for the S&P already this year. What's the number? 5,200, they are saying. Partly that's on the back of better profit expectations for some of these tech stocks.
It is. I mean, there has been a good foundation to the tech rally. In the past, there were some sales, hardly any profits. Now we've got good profits. And some of these PE multiples of the leading stocks are recognizable in the kind of 30s, which is not so high for companies that are growing at 30, 40, 50% per annum.
How long do these companies stay relevant? I'm asking this because we've already got questions about the Magnificent Seven. The analyst who coined the term is already saying it's done, it's over. It's too diverse, largely because Tesla hasn't lived up to the others. Some are calling it the Magnificent Six. Keith Fitzgerald this morning suggesting a Magnificent Two.
Yes, you shouldn't get carried away. Just because they're sitting inside these baskets does not mean that they're great stocks. And Tesla is a very good example, but even Meta, the old Facebook, that had a terrible time a couple of years ago, and it's had its recovery. So it doesn't mean that it's just a one-way bet and a one-way win.
Okay, well, let's look at the danger of size. If we take the indices and the groups themselves, some analysts saying at the moment that passive investing, ETFs, if you like, by the market, is partly to blame for the rise in these big cap mega stocks, but could also be the first to suffer when they fall.
Absolutely, and I think, if you go back to 20 or 30 years ago, the markets used to be dominated by institutional investors who were doing their stock picking, choosing the very best companies, and now we're getting carried away with acronyms that give us these kind of quick hits, quick profits, and that's not healthy either. So I'd like to see us in a much more balanced way. We're not going to happen though, so it is going to be acronyms, but be very, very careful about just buying a kind of theme that everyone keeps talking about, because you'll be the last guy in the door and you'll be the first person to lose some money.
What's the danger that comes with mega caps in general? If we take Nvidia, for example, pumped up to a $2 trillion valuation last week, is there anywhere for the company to go from there that's not going to be slightly disappointing for shareholders?
I think there's still a good momentum to AI and the Nvidia's position, but a narrow focus on one industry. You only need a change of president in the United States with a change of policy in order to bring about something that just hits the sector that you didn't see coming. And if you look back to what happened in China, the leading stocks for a long period of time there were the tech, and all of a sudden the government changed its mind overnight about some of the regulations around tech, and those stocks fell by 50%. So be very wary about a narrow investment portfolio. It may look great from day to day at the moment, but in a few months' time, with a change of direction of something, you could be nursing some significant losses.
Okay, well, let's look at the Nvidia and AI in general. We've had Jamie Dimon coming out in the last 24 hours, a man who's never short of an opinion, saying AI is the real deal.
Yeah.
But at the same time, we've got questions about how long Nvidia can keep its spot, partly because of competition, including from its own customers.
Absolutely, and if you look at Nvidia's position at the moment, you hear statistics like dominating their industry by taking 80% of all incremental sales. Now, that can't continue, but the underlying growth of AI will mean that even if their market share drops dramatically, they could still be showing some very, very significant profits growth. But yes, Nvidia's probably at that best time when the returns are so crazy, they can't be repeated.
Oh, we've got the Parkin IPO that has been announced this morning. How far off are we from that same kind of acronym creating excitement in this market?
I think we're a little way away from it because we just don't have the breadth of companies at the moment. But it's the thing about marketing good ideas to clients at the moment in this industry, dominated by retail, you've got to get the excitement going. So people do come out with these headlines of acronyms that kind of give people a sense, I just know the acronym, and therefore end up with a basket of stocks. I would say there's one positive, that people are not just focused on one single stock that they put their whole wealth into, and it is spread across a number of companies, but it is still only one industry, so be careful.
Gary Dugan, who is the Chief Investment Officer at Dalma Capital, speaking to us this morning about the rise of a new acronym coming out of Europe, the possible death of an old acronym, the Magnificent Seven, shedding some members. Looking also towards that Parkin IPO that we are going to be discussing later on the show this morning. And tomorrow morning as well, because Rich is going to be leaving the show early, heading down to the press conference for Parkin and getting some more information about that. Still to come on the show this morning, speaking of listed stocks and companies, we are going to be talking to the guys from Union Properties about the big land sale, 500 million dirhams. That they have announced, what it means for the company's capital, why they've done it, and what their plans are going forward. Keep listening to the Business Breakfast. If you want to get in touch with us this morning, the usual ways, 4001 or 04871 5500.
By I 103.8.
Join the conversation.